Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest trends of the stock markets, help you understand the sectors and the stocks that are buzzing in trade and what should be your investment strategy as you approach this rallying market that we are seeing today. We'll also be joined by an expert to help you really understand what should be your approach towards several stocks that are in news today. But first up, on the update on the markets right now, it's a great day for the markets, panning out to be a great Friday as we inch towards the second half and the last 2.5 hours of trade. You'll actually see that the Nifty and the Sensex are roaring, 2% almost up for the Sensex. It's 1160 points rally that you've already seen, 61,775. Also for the Nifty, it's over 300 points of a jump that you can see, 18,343 at the current level. So it's the kind of move that you're seeing, which is after a very long time. Of course, a whole lot of global cues have supported the kind of move that we've seen. Also, there's the buzz, not just from the primary market, there's not just from the secondary market, there's also primary market support coming in with new listings also moving the markets higher, and several of the stocks and the earnings that are also moving the momentum. Let's look at the factors that are leading the benchmarks to move up today. Nifty Bank, that's one index that's definitely higher in trade today. Of course, you can see 1.5% move on the Nifty Bank today. A whole lot of private names really supporting the markets in today's trading session, especially HDFC Bank. Look at that stock. That stock has been largely an underperformer this year, but the kind of move that we have seen here today, it's very, very surprising. 7% up on HDFC Bank at the day's high point after a long time. Perhaps, the stock is now going to be moving in, leading the pack of the whole banking stocks. Apart from this, if you see, there's a 2% up move on the Realty Index. Also, the IT Index, that's an outperformer today. Over 3% move. Again, an underperformer coming into the front rally as well, taking the rally from the front. 2.5% uptick for the financial services as well. 2% uptick for the metals. A whole lot of sectors are in the green right now. What's not performing? Autos in the slower lane, in the red right now. PSU banks also seeing profit booking, seeing about a 0.2% of a decline today. And FMCG stocks not performing in the day's trade. But let's welcome our guest for the day. Nilesh Jain joins in from Centrum Broking. He's the head of technicals and derivative research. Welcome, Nilesh, and thank you so much for taking the time out. Well, help us first understand, how do you see the kind of move that we've seen in the markets? How is it likely to pan out going forward? Nifty Bank at a record high level. So we are seeing, sharp rally on the benchmark indices. Several sectors really moving up front. Your thoughts?
Very good afternoon to you, Sakshi. There are multiple factors that are, supporting our Indian equity market. Starting with the US market, where we have seen a sharp rise, a sharp rebound that helped our Indian equity market to open on a gap of note. And looking at the reversal that we have seen in the Dow, I think there will be possibility of a further upside momentum to continue on the back of pullback rally, and that is likely to take Dow towards 34,000. If that happens, then definitely in our market as well, we are likely to see a follow-up buying in the coming week as well. So overall, looking at the structure of the Nifty index, where we have seen a gap of opening in today's trading session, and it looks like the further follow-up buying is very much likely, which will take Nifty towards 18,450 to 18,500 mark in a very short term. I won't be surprised if Nifty hits all-time high level in the November series itself. Now, on the other hand, if you look at the Bank Nifty, where we have already seen a fresh new all-time high levels in today's trading session, and looking at the structure, it seems like that Bank Nifty is heading towards 42,500 to 42,800 territory. And the trigger that we have got today is much awaited breakout on HDFC Queens. HDFC Bank, in fact, is leading from the front. Although the other banks are not supporting, but somehow HDFC Bank, where we have seen after a long time, a lot of consolidation we have seen in that particular counter. Finally, that counter is showing some sort of strength. So these are the factors which are in positive side of the Indian equity market. And lastly, if you look at the volatility index in India, which has dropped below 15 levels, after almost a span of more than 1 year. So that kind of drop is certainly giving more confidence to the bulls. And looking at the structure, we are very much positive. Buy and decline should be the approach.
Okay, buy on decline should be the approach, and good news, perhaps November series may see Nifty touching record levels as well. So this is the time to be in the markets and enjoy the rally after the entire year, which has been full of volatility. There's finally move coming in because all cylinders are firing, not just the domestic investors, foreign institutional investors have come back, and also the global cues have started to support the move on the upside as well. Now, apart from the HDFC twins that already Nilesh has discussed and some of the important stocks right there, there's one more stock that is buzzing in action, and let's talk about that. And that's Zomato, the food delivery aggregator, which has reported its earnings yesterday. And today we've actually seen a very sharp reaction post the earnings. On the upside, the stock has moved 10% today in the early trade. Now, remember, the company has narrowed its losses to 251 crores for the September quarter. And when you compare this to 429 odd crore rupees that was seen in the corresponding period of the previous financial year. Now, remember, the company has also revealed that this is the first quarter where they have also crossed $1 billion mark in annualized revenue as well. The revenue increased 62.2% to 1661 crores as against 1024 odd crores during the year ago period. Now, remember, the total adjusted earnings before interest, taxes, depreciation and amortization, that's EBITDA, losses also, however, increased to 192 crores in Q2 when you compare it to 150 odd crores. So operationally, there's a little bit of a move on the losses, but on the upside, but on the bottom line, there's definitely a decline right here. Nilesh, I want to understand from you, Zomato and many stocks like Zomato, which were the newly age listed tech stocks in the last year, they've actually had a very bad and a tough time in this year, so to speak, after that fanfare kind of a listing that we saw last year. The investors were losing hope because there was not too much bright spots being seen on the earnings front as well. Help us understand, post the earnings, how have you been able to analyze the earnings, and does it show any kind of a promise for stock like Zomato going forward?
Yes, so in fact, if you look at the Zomato listing and post that listing, we have seen a fresh all-time high levels as well. There was a lot of buzz around 160 levels that stock might move towards 180 to 200. But soon after that, the stock got hammered on the back of a loss that company has started posted. And looking at the overall structure, the carnage that we have seen in this particular counter from 160 to almost at one point of time it was trading at a level of 40 rupees. Although we have seen some smart recovery, and from valuation point, it was fairly valued near about 40 to 60 levels. And now, due to the recovery technically that we have seen from the lower levels, that is certainly promising. And at current level, I feel compared to the 160, 150 levels that it was trading earlier, I think it's fairly valued currently. And now coming back to the numbers, where we have seen narrowing of the losses from 430 to 250, that is certainly a positive sign. And more positive factor that is coming is that company is expected to reach the break-even point in next 2 to 3 quarters. So that is certainly giving more confidence to the bulls. And if at all we see the break-even in next 2 to 3 quarters, that certainly get discounted in the price action going forward. So as far as the levels are concerned, I think at 68, 69 levels, it is not looking that attractive. One should definitely wait for some decline towards 65 to 60 levels for making a fresh entry in this particular counter. Those who are already holding the long position can continue to remain long. On the higher side, we can expect stock to test the levels of 75 to 80 in next 2 to 3 months. And the important support is placed at 58 level. So that should be the stop loss for the long position.
Okay, understood. So in case one needs to take a fresh position, one should still wait for 60 odd levels or 65 odd levels, because those will be better entry points for the stock. But going forward, there could be an upside that you can actually expect. But would you really say that the worst is behind? I know that there is not too much historical data for you to really study on Zomato. But from so far that we have seen, does it show that, the worst may be behind us? Like you pointed out, that the valuations now look much attractive than what we had seen last year at the time of listing.
Well, it's too early to comment. You have rightly pointed out that worst. I don't think so that worst is behind, because it's just 1 quarter that loss has been narrowing, and we still need to wait and watch out for further quarterly numbers to be watched out for, because usually it happens that in 1 quarter we see shrinking of the losses. But what if company post in another quarter we see another loss? So that is the major concern. Although the guidance the company has given is slightly on a positive side, if at all we see in line with those, if company manages to shrink the losses further, that would be a trigger for company's revival. But looking at the overall structure so far, from the lower levels, no doubt we have seen some recoveries. It's too early to comment on that front. But those who are already holding the long position, I would advise to remain long with the strict stop loss below 60. So that should be the stop loss. One should definitely place. And see, I'm not expecting any V-shaped recovery in this particular counter. We can expect gradual up move, and with some sort of consolidation that cannot be ruled out. And as I mentioned, it's too early to comment on that front.
Correct. So what exactly should investors keep in mind? Right now, you've suggested to them the strategies as per a long-term investor as well. What should one really wait for? What will really turn around for the company and stock going forward? What should investors really do at this point in time? Keep an eye out on at least that, when things start really working for the company and the stock may actually eventually move up.
See, there are two things. First, from technical point of view, one needs to clearly watch out for the levels counters levels like 75 on the higher side. And if you look at 200 moving average, that is also coming around 70 odd levels. So that needs to be cleared on closing basis decisively for
Hmm.
further up to continue. On fundamental front, see, the major caveat this company was having is the acquisition of a blanket business, and
Yeah.
that business is still showing a lot of losses. Although
Hmm.
Zomato loss is shrinking, but Blinkit's business loss has widened. So that is
Hmm.
that the company is having, that is slightly on a higher side. So we need to
Correct.
wait and watch out for those numbers to get merged in the Zomato. And
Hmm.
if at all we see any improvement in the coming quarter, that could be the first trigger for companies for a revival. Although we have got early signs of slightly reduction in the losses, so that is no doubt an early sign and giving positive outlook in the short term basis. But
Hmm.
I would rather wait for another quarter to get more comfort and to get more clarity.
Okay, understood that. Well, apart from Zomato also, is there any other stock that you're keeping on your radar at this point in time as your preferred recommendation that you may want to share with all the investors today?
Right. So, in fact, if you look at in today's trading session, barring HDFC Twins, we have witnessed profit booking from the high levels in the majority of the large cap counters. And one need to watch out for sideways counters like IGL. So that particular counter has given a flag and fold breakout on the daily time frame chart. So that
Hmm.
looks positive, and we can expect upside move to continue towards 432 to 435. Stop loss should be placed below 415. And in this kind of market, I still believe that HDFC Twins are likely to do well, although we have seen good 6 to 7% up move. But I
Hmm.
think if at all we see any decent correction going forward, that could be a good opportunity to make a fresh entry in HDFC Twins.
Okay, fresh entry in HDFC Twins can be made and IGL as a preferred pick where target and stop losses shared with you. Thank you so much, Nilesh, for being with us on the show and sharing the insights and strategies for all the investors in this market. Hoping to see those record high levels on the Nifty. Hope you have a great trading day ahead and hope to catch you soon on Business Today TV as well. Let's now move on to see how the markets are trading at this point in time. Well, at the day's high point is clearly what you can see, the Sensex and the Nifty moving up. It's just slightly come off those high point of the day, but still 1037 points up on the Sensex, 61,650, 18,311 for the Nifty as well, 284 points up, 1.5% uptick for the Nifty, 1.7% uptick for the Sensex as well. The sectors are moving and rallying further. Nifty Bank definitely one of the noted gainers in today's trading session. And how can you forget IT sector, which is really taking the lead today, over 3% moves on the upside. Financial services, metal stocks shining bright in trade, and also the realty pack. In terms of the top gainers on the Nifty, what's really supporting the move on the index? Then you see it's the IT majors. You're seeing HCL Technologies definitely 4% up in trade. Apart from this, you also have Infosys that's up for 4.5% in trade. The HDFC Twins we've already talked about, high weightage, heavy weighted stocks that are definitely contributing to the sentiments today, up about 6% odd. And apart from this, there's Tech Mahindra and Apollo Hospitals that are also up by 4% odd. On the losing side, there are only 4 losers on the Nifty 50 index today. It's Eicher Motors, Hero MotoCorp, Britannia, M&M. Eicher Motors, after the earnings, the Hero MotoCorp is being seen some profit booking. It was running very, very sharply over the last 2 or 3 odd trading sessions. Britannia and M&M also seeing some slight losses in today's trading session. With that, we wrap up today's trading, this edition. But do stay tuned on to Business Today TV for a whole lot more information on markets and on business news coming up right up next for you. But don't forget to also stay tuned with us onto our other platforms. You can stay in touch with us through social media platforms like Facebook, Twitter, Instagram, and LinkedIn, where all of our information is also present, and you can also share your feedback with us. Thanks a lot for tuning in for now.